Welcome to the Real Advisor Podcast, TRAP, TRAP. Please follow us and join in the conversation on Twitter @Advisor Podcast, where you can suggest ideas and themes you'd like the TRAP team to discuss. Also remember to like and subscribe to our YouTube channel and leave a 6 out of 5-star review on iTunes. Doing all this really helps us, which means we can do more to help you. Now let's head over to the studio for the latest pile of TRAP.
Yes, indeed, dear Trappists. Welcome back to the Real Advisor Podcast, TRAP, TRAP. My name is Nick Lincoln. This is episode 60 that we're somehow doing in the digital studio Doom. And joining me in it are the 3 other horsemen of the apocalypse. Carl Delavocci, the voice widger. Alan, the storyteller Smith. And Andy, Ultra Heart. Now, gentlemen, we have a show packed full of absolutely nothing. So let's start things underway with some more high energy review, or a high energy review read from my very good friend, the Right Honourable Mr. Andrew Hart.
Thank you very much, Nick. This is 5 stars, entitled The Honest and Refreshing Unedited Journey. You bring wisdom to those who are navigating their own uncertain path in the world. You bring reassurance that it's okay not to have all the answers. You bring peace of mind that it's okay to make mistakes and that you'll be wiser for it. You bring optimism and hope for your own achievements. You bring excitement to me and many others for what's possible. So thank you for taking the time to make a difference and inspire me and many others. The true impact of this you'll never know, but I, for one, am hugely grateful. This is from Keith Boys, who runs a great firm in Scotland. Back to you, Nicholas.
Yes, I think I know.
Sure, we've read
Keith
that
Boys
before, but worth reading again. It's so good.
I don't think we have, but there's been a bit of a shake-up. We used to use a company called Chartable that have been sunsetted, as in the business is no longer active. So now we're
4 days
scrambling around in the background trying to find an alternative replacement and having somewhat of a problem. But long as nobody noticed, Alan, that's all good. Sunsetted.
Which means closed down.
Deprecated.
Given advanced notice.
If you want to sound like an IT, deprecated.
Well, that's another thing.
Just look at the Apple podcast platform. That's where they normally reside. I think that's the only place you can leave.
If I need further tech help, can I call you?
We discussed all this pre-recorded.
You can if you
I can
really
call you
want.
whenever.
I am busy.
Okay, great.
Go on.
Great.
Right.
It's like Groundhog Day. We just had this discussion offline.
Where am I?
Jesus Christ.
Where am I? What's my name? Okay, let's put a topical timestamp on this. And thank you for the review, Keith, and thanks to all the Trappists who've sent in reviews over the last year. We're coming to the end of the year. It's been a great year for Trap. The reviews are all part of the shot in the arm that keeps us knocking this stuff out for you. So let's put a timestamp on this episode with some topical tidbits. Mr. Hart, exciting announcement.
Yes. So the first thing is to reconfirm that TRAP Live 2025 will be on the 14th of May, Wednesday the 14th of May, at the Royal College of Physicians, actually, a venue that some of you may know well. It's where I host Hum. And yeah, tickets will be going on sale sometime early in 2025. If you want to register your interest and get notified when the tickets go on sale, please go to therealadvisorpodcast.com and pop in your details. I think that's it on TRAP Live for the moment. And I've also agreed a date for Humans Under Management London 2025. It's going to be on Wednesday, the 12th of November 2025. I'm asking the Trappists if they know of any competing events around that time, because we don't want conference clashes. But they are the dates, key dates for next year: 14th of May, Wednesday the 14th of May, TRAP Live, and Wednesday the 12th of November, Hum Live. Over to you, Nicholas, for some exciting news.
Alan, have you any
things to promote?
Anything capital-wise to promote? Just on...
No, I do that through the normal channels. I don't abuse this platform.
Okay,
sell my own private personal stuff.
Sell your wares.
No,
I know others do against our
you,
house
Nicholas.
rules. But
Okay,
Full-
there we go.
You're not recruiting at the moment, are you, Carl?
Full respect to you.
Yeah.
Right, come on.
Move
Bloody
on.
hell, you lot. Herding cats. Okay, so this last year has been really good for the Trap Pack, and we use a service called Buzzsprout to propagate our episodes onto all the podcast apps of choice. And Buzzsprout sent us an email the other week, or last week actually, saying we're in the top 5% of all of their podcasts, which is fantastic news. The most popular, I don't quite know how this works. The most popular city is Dublin, which is in the county of Leinster, apparently. But I think nearly everyone in Ireland...
Why didn't you understand it, Nick? Because Birmingham, Manchester, London, Bristol, they're all separated out on their own.
Right, Dublin / Leinster. Then it's Birmingham, Birmingham. Manchester, Manchester. That's what threw me. So I thought Dublin and Leinster were like two different places.
Are we surprised
Why
that
did you
it's
send
so
an email to Buzz?
You're surprised that it's popular,
everyone
very
lives in
popular
Dublin.
in Dublin.
Ireland is geographically, the population is very densely located in Dublin, isn't it? So
Careful, Nick. Careful.
No, it's the truth.
Nick Lincoln talking about Ireland.
All right, okay.
Would you like my input here, or do you
No.
just want
I'm
to
going
keep going hanging
to
yourself?
mansplain
Only
to
there
you.
was
I'm
an
going to
Irish
English
guy that could confirm all of this confusion.
Okay,
Yeah,
Dublin
go on, Nick.
downloads 3,669. Total downloads in Ireland 4,611. Okay, are we happy with those figures? I'm just reciting the facts to you. That's what it is. They seem to be all in Dublin.
Okay, I'm not sure
had
what
their
point you
Christmas
just
pudding this
proved there,
morning.
but well done you.
Well, I'm saying the 4,600 downloads, 3,700 were from Dublin. That's all. Whereas London had 2,259 downloads, but there were
That's very
67,000.
That's very poor. And the three of you live there in big old London, and we only had how many?
67,000 downloads for the UK, 4,600 for Ireland.
Ireland is
London, though. That's poor. Your hometown. You're
5%
home
short
proud or
of
not
that
fans.
data is accurate.
I'd say it's perfectly accurate, and yeah,
right.
It
Dublin
must
is
be
where
down
it's
to
at.
your efforts, Carl, that Trap is so big in Ireland.
Must be, considering like four people told me
popularity.
they listened. But anyway,
Are you
Top
hello
episodes.
to all the other people.
Top
what were the
episodes.
top episodes?
Was episode 41, the SJP et al. Big Brands. That was our second go, I think, with SJP, wasn't it? Actually, that was the one, obviously from this year, where we were discussing the travails they've been having. Yeah. What else?
Our biggest
That's
episode
pretty much
last
it.
year was the first SJP one.
I think it was.
Interesting.
SJP. If you want to get a boost to your podcast, just mention SJP.
They
Have a
said
personal
that
card
we've
for your
done-
audience. Do it in a way that's not too negative. Okay. Let's get on with the show. And it's me still. Oh God, the bloody budget. We can't escape the budget, can we? There's still, the reverberations are rippling around financial services here. And I think to a degree in your country as well with your budget, Carl. So there was this thing about taking tax-free cash before the budget. And then if tax-free cash wasn't dicked around with, you could just unwind it and do the 30-day cooling notice thing. HMRC very usefully put out a newsletter after the budget saying you can't do that. Why they couldn't do it before the budget, I do not know. They've got one job, is to collect taxes,
It's mad,
regulate
isn't
how
it?
taxes are taken. And they didn't put this newsletter out until after the event saying you can't do that because taking tax-free cash is not a financial transaction. So you had all these advisors now thinking, shit, if the toothpaste is out of the tube, you cannot put the tax-free cash back into your pension plan. So just a really bad look for the UK. Yet again, bad look for the UK institutions, bad look for HMRC, bad look for those advisors who did this anyway and kind of panicked. So we don't change the plans or anything until the actual situation changes. So a bit of a shit show. We didn't get involved in any of this. I know we didn't. Some advisors obviously did and are having very interesting discussions with their PI insurers, I'm sure, on that.
Some of the pension providers told them that they could do it.
That's right. That's right. This is how bad our tax code is. That the pension techies, who we all
Jesus
rely
Christ.
on, we got a technical. We always lean, don't we, on the platform tech team or the insurance company. They were saying you could do this, and these are the people that are immersed in it day in day out. They didn't even understand the UK tax code. This is how bad it's got. So Joe Public, the layman out there, has not got a bloody hope in hell of complying with all the. If you're self-employed or you're in a business, there's so much now to get you. So I just think it's an indictment of our system, and it's
Just
just
on that point, Nick, there was an article in the Financial Times at the weekend, which was exactly about this: the complexity of pension planning. Quoted yours truly, and
that was good. That was a really good quote. Was it expensive?
No, it was free.
Oh, even better. It's really good, mate.
The financial journalist I know, Maura, did a great job, but she just explained the whole thing, and she made an interesting point. I know gets political, but it's, the powers that be that make these decisions and chop and change pension rules all the time, they benefit the vast majority, civil servants and MPs, from a gold-plated final salary pension scheme that just seems to be unchanged regardless of anything that goes on. So they feel duty bound to meddle with it and everyone else, and trying to make our job is bad enough. Imagine being an investor, a punter, someone trying to save for their retirement. The sooner do you put money into something, oh no, we've changed that rule. And what has she quoted? The rules around annual allowances runs to, I can't remember, 5,000 words or some huge 50,000 words or something, some huge document that nobody could realistically remember quote. And complexity just breeds this lack of trust, and it's hugely annoying.
I think if we're done on that, unless you've got something to say, that leads nicely off to Roger's point, because you're talking about the need for consistent pension
Yeah,
legislation.
I just said I'd follow on kind of from your point. But just on Alan's point there about the FT article, I loved her sub-headline was pensions is like trying to nail jelly to the wall. That was brilliant.
Yeah.
It's as difficult as that. Yeah.
Yeah, so we're in because of the budget changes, we're in the realm at the moment of maxing out PRSA contributions because that door is closing on the 31st of December. So where heretofore financial advisors were frequenting watering holes all over the place and enjoying themselves, it is flat to the mat all over the shop because people are really afraid of missing this opportunity on behalf of their clients. So it's really, really messy. And look, I mentioned it before. It just makes us kind of feel. I heard someone saying it's like shooting fish in a barrel at the moment, and I went, oh my God, like this is back to that old sales kind of a thing. But look, it's just exactly what you guys have just said. I know that, the inheritance tax and all that stuff that you guys have as well. It's can we just have somebody, please, to give us long-term pensions legislation so that we can plan, and let's decide that we're going to leave it as it is, and you can kind of have a 10-year strategy, because after all, pensions are long-term. So just give us the rules and stop bloody making these fundamental changes.
I was gonna
tweaks, okay.
Yeah,
but fundamental
that's exactly
changes.
right, Carl.
Yeah.
The key words there being tweaks are okay. We expect that. There needs to be a little bit of balancing, but these are literally 360 decisions.
Yeah.
It's included, it's not included. You can do that, you can't do that now. Yeah, it's a nightmare.
There was a comment that other really important aspects of the economy, like setting of interest rates, was some years ago removed from the government's remit to a theoretically independent body called the Bank of England, because setting interest rates is a very important thing. It's very long term, and there's a strong case, I think, for putting pension legislation in the same independent, cross-party structure or body that can think long-term, and it's not a political vote catcher or vote loser by chopping and changing this whole time, like interest rates, as I say.
Yeah, 100%. Yeah.
Okay, well, we're all in agreement on that. Okie dokie. Now, I've got no idea what in it. I tried to read the article that you guys sent through. Microstrategy. Some of you talk about it quickly.
Okay, I'll give a very high-level overview about this. I'm sure Storyteller's got some more insights to add. It's been one of the biggest stories of the year, Nicholas, so if it's passed you by, fine. There's a company called Microstrategy,
Bollocks.
and they've become so huge that they're now entering the NASDAQ 100. It's run by a charismatic individual, Michael Saylor, is it, Storyteller? Long story short, they own currently the bulk of their balance sheet is in Bitcoin. I think they own about 45 billion of real Bitcoin. I say real Bitcoin, digital Bitcoin of value of 45 billion. Yeah. But the company is worth 3 to 4 times that. It's done 500% this year so far. And if you owned it since last year, it's done close to 2,000, 3,000%. It's been absolutely shooting the lights out. And he's doing something which is financial alchemy, where he's issuing more shares, buying more Bitcoin going up, issuing more shares, buying more Bitcoin. I don't quite understand it, but whenever anything has got financial alchemy attached to it, it's alarm bells to me. Something's going to blow up at some point.
Yep.
What's financial alchemy? Sorry, explain.
I'll Google it, Carl. Over to you, Storyteller.
So you don't know.
Anything else to add?
Well, look, this is part of a bigger conversation. I genuinely think we should do an episode in the new year on this whole thing, on Bitcoin in particular, MicroStrategy and what they are doing. And I know that at least 2 of you on this podcast will just turn your nose up at it, but it's something that's in the landscape. People talk about it, clients talk about it. To say that either I don't know or it's rubbish or I don't care exposes you, because every now and again new technology comes along, new ideas come along, and I just think we all need to have a very thoughtful conversation or sort of response to clients, prospective clients about it, that says that not that you just dismissed it without a thought, but that you have investigated it, you've thoroughly reviewed it, you understand the mechanics, how it works.
Alan, thoroughly investigated it. I mean, if we thoroughly investigate everything that's been proposed out there, you wouldn't get out of bed in the morning.
Well, if you restricted your thorough investigation to the fastest growing asset class in history.
It's not an asset class.
No, I get it.
But based on what? Based on your definition.
Yeah.
So,
providing
Michael Saylor is a very interesting character. He basically has a company which is a tech business, MicroStrategy, that in 2020 he was looking at the collapse of interest rates and his how he was holding money and cash in his organization, and realized with the debasement of currency that we all know about, and year after year we know that the pound in your pocket, the dollar, the euro in your pocket is actually worth less. That's stating the obvious.
Correct. Yeah.
Is there an alternative way that you can protect the
Purchasing power,
kind of strategic reserve, or your kind of treasury within a company? So he starts dipping his toe into Bitcoin, and obviously it's done very well for him over the years. And now he has come up with a very sophisticated set of financial engineering. I think you didn't mention, if you understand, and it is quite a complex thing, he issues these convertible bonds. So he is, lots of companies, lots of people need to hold bonds. Bonds are designed to be, secure. Shouldn't be, you get first take on if anything untoward happens. You're ahead of the on the pecking order, on the structure than equity holders are.
Equity holders, yeah.
And ultimately, he's using that money to buy more Bitcoin. He just bought, we're recording this on Monday. He just announced today he's bought another, I can't remember, 100,000 or something Bitcoin. So the point of this is his company now is effectively a proxy for Bitcoin. There's lots of organizations that can't buy Bitcoin. Certainly in the UK, pension funds, you're not allowed to buy Bitcoin. So if you hold some MicroStrategy, you're effectively getting a leveraged play on ownership of Bitcoin. And I wouldn't be against, it's not a regulated product, whether it's an asset class or otherwise, but I wouldn't be against clients wishing to hold 1% of MicroStrategy in a pension portfolio as part of the investment playpen. There's a whole other conversation that I'll keep for another time, but just modern way of thinking, the 60-40 model, equity, I think is out of date, equity bond portfolios. There's a current model which we endorse, which is 100% equity. That's more the modern thing. And maybe the next generation, if you're taking on clients under a certain age, maybe it's 100% global equity with a small allocation to something like MicroStrategy and or Bitcoin as a hedge, if nothing else. But that's what he's doing. It is interesting. He's entering the NASDAQ now, which means on December 23rd,
everyone's going to have to buy it.
Everyone's going to have to buy. Those index funds
it's an interesting
buy,
story.
Which is further going to boost
looking forward to seeing how
the
it plays
equity
out.
value, which is going to allow him to issue further debt instruments, which will allow them to buy more Bitcoin. It in some, from the outsider, Nick will say it's a bit of a fast-moving Ponzi scheme. But as long as everything keeps,
I was going to say the word Ponzi. It's exactly what it reeks off. Yeah. Exactly
It's not quite that, but
so someone jumps off the
unique in its own
carousel
right.
and the whole thing.
The minute, if as has been suggested, as Donald Trump has already said he will do, if the US decides to use Bitcoin as a strategic, reserve for for their treasury, that immediately and everything changes from that date. And Trump has already suggested that he will do so. You might argue it's a Ponzi scheme, but so is currency, so is the dollar, so is the pound. They're all Ponzi schemes.
Saylor is convinced, which obviously means a lot or nothing. It depends on what side of the fence. Each individual Bitcoin will be worth $1 million. Obviously, the supply constraints, etc. He's been banging on about it for a few years. So far, it's going his way.
His view is it will hit $13
see.
million over the next 20 years. But obviously, he's got a lot of skin in this particular game, and he would say that. But it has been growing at 60% compound a year with a lot of volatility. Anyway, story for another time. It is interesting, Andrew. Well done in terms of topical tidbits. It is quite interesting, and clients will ask it.
Thank you,
clients will ask about it for sure.
Thank you, Alan.
What's next?
Well, the next thing, we just had a sort of raft of stupid predictions, and we're in that kind of mode. So, shall I do my one with Goldman Sachs, or do you want to do yours? Because you're the bullet point after that, Smithy, on predictions. And then come back to me on Goldman Sachs.
Well, all right. I mean, Goldman Sachs do form part of my one, I suppose, to an extent. I was just, we are at the end of the year, and inevitably...
Insight. We like this.
Yeah, inevitably, all across the media... you will see predictions from all sorts of esteemed organizations, experts, economists, and what have you. And I like to keep track on these things, and I do so every year around this time. And then the great thing about the internet, of course, is you just do a little Google search and you find out what people were predicting a year ago. And let me just share with you what I saw. So the obvious area of prediction is, where will the S&P 500 be by the end of next year?
2024, yeah.
Yeah, so this time last year, the end of 2023, the requests were going out, and I mean loads of organizations, but I'll just name a few of them. J.P. Morgan, Morgan Stanley, UBS, Wells Fargo, Goldman Sachs, Bank of America, Deutsche Bank, and there was a lot of others. Can you imagine all those companies, the sort of armies of economists and PhDs and experts and just ridiculous amounts of brain power and computing power within that? So this is where they said that the S&P would end 2024. I won't name them, a few of them. So JP Morgan said 4,200. Morgan Stanley, 4,500. UBS, 4,600. Goldman Sachs, 4,700. Deutsche Bank being the most bullish, 5,100. What is it today? It's over 6,000, isn't it? S&P 500.
6,100, yeah, 6,000, yeah.
6,100, something of that order. So the median across all these, they asked about 30 of these experts, investment banks, huge organizations. The median prediction was 4,875. So not remotely close. So, I mean, what is the bloody point of these? I know they put them out every year because maybe clients expect it or people want to do it, but they weren't even close. They were out by an order of magnitude in terms of the prediction. What I think often happens, though, you've got recency bias. So we've had a cracking year for markets in 2024, for the S&P in particular. So probably the predictions are going to be quite bullish for next year, for 2025. So that tends to be well. They look at what happened last 12 months and then predict a bit forward.
I think things revert to the mean. You know, if you have a bullish year, really, you should be managing expectations for if you're going to deal with this short-term rubbish, you should be managing expectations with a lower.
Yeah,
thing.
You should.
Goldman Sachs, and there's a link to it in the so-called show notes. So they haven't. I'm sure in that report they predict for the next year as well, but they predict for the next 10 years what they think the S&P will deliver. 3% per annum nominal before inflation, 1% in real, 1% a year on the S&P for the next decade in real terms. So that's very conservative. And as we all do, I chuck these things into Evernote and then set an alarm to go off in 10 years' time, so it pops up. And I think, okay, let's have a look at this.
Interesting to what they're assuming for interest to work out their real rate. Well, I'm sorry, for inflation.
Exactly.
Well, 2%. I'm guessing it was 3% nominal, 1% real. 3 minus 1.
So they're assuming 2% inflation.
Yeah.
Which, again, good luck with that. If they assume that's going to be the next 10 years with the way things are going.
But the US has always had slightly lower inflation than us, hasn't it? Because it's not so reliant on imports and so forth. So I think 2%.
Doesn't make you think, doesn't it? If it's 1% real rate, that's before, like for our clients, before tax and charges.
Yeah.
So
absolutely.
the average client who's invested 100%, if the Goldmans are right, they're wrong in everything else, but if they invest 100% in the S&P, which would be considered to be a very bullish, aggressive investment portfolio, net of tax and costs, they are going to lose money in real terms. Now, tell me about the 60-40 portfolio clients, or even less, where they're going. They are materially going backwards in real terms, net of the aforementioned. Interesting.
Don't know about that, right? Don't know if your deduction from the Goldman Sachs prediction, number one, I think the Goldman Sachs prediction is going to be absolutely incorrect, but the attacking of the 60-40 portfolio, I think, is unfounded, and I think for sure there's still a home for 60-40 portfolios. I think this is probably a much bigger discussion that we should definitely revisit early in the new year. This is just one thing follows the other. If you assume that bonds will perform less than something like S&P 500 over the next 10 years, but I think
by definition it has to be less than 1% real rate.
Yeah, but I think you're making assumptions there that they're making a prediction that there's going to be a massive change as to what has happened in history, right? So that stock markets aren't going to go up by what we have seen as norm. So that the follow on from that doesn't necessarily mean that bonds are going to produce a negative result. It might mean that more money will go towards bonds. So I would say another way of putting this point is, well, what do Goldman Sachs say that clients should invest in? Because for all the reasons you pointed out, well, then equities is not the place to be in Goldman Sachs. So where should your clients invest the money? You are wealth managers,
it depends
after
on
all.
what department and what individual you ask at Goldman Sachs. Obviously,
structured products designed by Goldman Sachs.
Don't have a viewpoint.
And private equity and Bitcoin and all of that kind of stuff. So, I don't know. It opens a whole different kimono of what the new world looks like. invest in what has always worked. And
sure, but
for
I
me,
think
the 60-40 portfolio has
markets do move in
delivered.
cycles. Markets move in cycles. Cycles have been elongated over the last decade or so, certainly post-financial crash. Nick hits the right point, which is that there is always, let's say over a century, a long-term reversion to mean. Equities do about 4%,
10-11%
real.
Oh, real, yeah.
Yeah, not real, nominal 10-11% a year.
Yeah, 10-11, yeah.
And bonds do about 3% less than that.
Yeah.
Over the time. So, and we have had an extraordinary decade, more, 15 years maybe, for global equities, US equities in particular. So, it's not completely out of the question that for the next 10 years, as this prediction relates to, are a bit lower than last 10 years or last 20 years. Nick?
Well, there's a bit lower. Sorry, Nick, just before, there's a bit lower, and there's this is no longer makes sense. So, sorry, Nick.
That's fine. I think we all remember it was about 10, 12 years ago. We had all these papers coming out from the regulator and others saying future returns are going to be lower. Absolutely wrong. And I did read a blog, and so I can't credit it, and I haven't got the link to it here. I'll try and find it, put it in the so-called show notes. A guy who was kind of eviscerating this time of year in the predictions. He's like, every one of these predictions will have the same core tenets. Future returns are going to be lower. We're experiencing higher volatility. It's a stock pickers market. The one thing, and you do have to recognise what kind of the broader economy, what was going on. We have never had in the history of money the level of unprecedented money printing.
Correct.
Which is just dumped on the markets, and so people had to invest, and organisations and corporates had to invest. There was no other way of doing it. It's just we're all feeling the pain of it through inflation right now, and part of the debasement of our currencies. So equities is the only place to be. If there was ever any doubt, equities are the only place to be realistically of legit assets with a 100-year track record.
Yeah, companies can raise their prices.
I can't see the level of. There will still governments around the world will still, have the printing presses cranking out, but I don't think to the same extent they did from COVID.
Yeah, it was unprecedented.
Again, it could be unprecedented. And if you just look at the impacts and what it does to an economy, it's great in the short term. We loved it. Markets boom, but time will tell, my friends. Time will tell.
Good. I'm just distracted. Penny's cat is outside meowing to be let back in, but she's been vomiting inside the house today. She goes outside and eats grass and then uses that to clean her gut. She throws it up.
Cairo.
So I've just chucked her outside and shut the cat flap. So Penny, if you're watching this, I'm sorry, my love, but I just cannot take it anymore. Right. Okay, another fire thing. Financial independence. What are the last two? What's the R and E stand for, Ultra? That's right, Ultra.
Leading question.
Early. A Moneyvator blog. I like the Moneyvator, one of the very good UK-based aggregators of financial stories. And there was a long guest piece in there on the FIRE movement and how perhaps it's not in all cases quite what it should be. It's a very long piece. The link to it is in the show notes. Read it. But the comments, these people are very, very brittle. This FIRE movement, my God, if you criticise them, they just jump straight in with both feet.
I know.
It's
Carl knows it. Remember, who was it? One of you infiltrated the FIRE Facebook group or something, didn't you?
I think I did. Yeah. I think I was booted out. I didn't even post anything.
I may have spies in there. Oh my God. Yeah, I've built a bunker under my house as a result.
Don't upset because Andy loves it. He loves it. He thinks you've got it all wrong.
Yeah, I know.
Is it a good article? I mean, Nick, can you summarise what it said? Or
it's the kind of thing that I've been talking about. The fact that if you suddenly walk away from work at the age of 40. You've got 5-6 decades ahead of you, and what are you going to do? And I know, Andy, it's not everyone would just retire early, but the movement is called Financial Independence Retire Early. Yeah. And he makes the point that, and somebody else said this is not his quote, but someone else says, if you're really that unhappy with your career, change your career. But don't. I imagine a lot of these people are incels without children. How can you really? If you've got kids, there's no way you can. Don't shoot fire people. Anyway, we'll get Barney Rubble on. What's his name? Barney Whittier. We're going to get to. He's a fire guy who Andy highly talks about, and we're going to try and get him on the show. I think at some stage in the new year, so he can give his side.
He's agreed to come on.
Carl will go head to head with him.
Yes, we'll get him.
To be fair, I'm looking forward to it because I think he's a very balanced guy. Actually, I don't think he's. He's got some really good points to make, and Andy's point is always very well made. Actually, the FIRE movement at its core is a lot of the philosophies we will teach, be. Yeah. So I get it. It's just this thing about Exactly. I read the article, Nick, right? So it's exactly like the article is going, oh, so you give up at 40 and then you've kind of no purpose. And that's my challenge with it all the time. So I'm looking forward to talking to Barney. I really am.
Just to close on this, the article leads off with the story of a guy, I think his name is Luke, who won £1.6 million on the lottery, worked at McDonald's.
And went back to work.
Not because, you hear these horror stories of people blowing it, just goes on, whatever. Yeah. He went back to work because he just missed his mates. And the only thing that changed was he got a taxi to work instead of walking. Okay, well, this is the last thing on the docket. This is the last topical tidbit because so we kind of raced through that to a little, which is not bad, I suppose. We don't need to spin these things out.
No,
we're ahead of time. Are we going to give them a Christmas present and not?
Let's go.
Let's go. Okay, so Ultra. I saw this. It's interesting. Vanguard.
Well, this weirdly has been the story of the week, and I think it's not a huge story. But anyway, Vanguard and their DIY investor solution offering have, weirdly or not, decided to implement a minimum fee because they've got all of these people that have got tiny amounts of assets making tiny contributions every single month that want their investment return to do the heavy lifting when the contribution should be doing the heavy lifting. And I think they've implemented a minimum something like £4 a month fee, so it works out to be they want to charge a minimum £48 per person, which is sweet FA in the grand scheme of running a business, but all the forums have been up in arms saying, how dare Vanguard do this? And I'm going to move my £6,000 away from Vanguard. They're not going to have my business anymore. I'm going to join you and move my £4,287 away from Vanguard. Obviously, I think the sweet spot number is something like 34,000 or 40,000. Again, I haven't really looked into the details.
32,000.
32,000 is the sweet spot. And also they're shoehorning some other people into...
Sorry, what do you mean by sweet spot? I don't understand.
Where the
it's
the
actually costing you money up until 32,000, and then after it's
where you sort of break even over the minimum fee or whatever. But they've got a managed option, which is I think their easier one to look after, where they're not implementing the fee in such an aggressive way. But again, this is how these things work. The wider sort of concept is something called enshittification. It is a word. I'm not swearing. It's called enshittification. I've done a link to it in Wikipedia. It's basically businesses starting out that are amazing, and then over time focusing all on the shareholder value and making the business, pretty rubbish. Uber first started, you get a cab for £5, they turn up, they're smiling, the car smells nice. 3 years later, you get the same car, it's 45 quid, the car stinks, the guy's, super pissed off, but you're still using Uber. That's an example. All businesses over time get shittification and shittification is applied to them, and that's an example of what's happening at Vanguard. So it's been a huge story in the investing world, and we're not sure how people are going to react, but obviously the people with small accounts are going to leave them, which is probably achieving someone to achieve. But it's more bad press for Vanguard. They got a lot of bad press, launching their financial advice offering, and then obviously pulled out of that market because it's a tough market to be in. And now, even in the DIY side, they're again slightly annoying their early clients and customers.
And that is their point. That is their point, right? I have no problem in them saying, okay, we can no longer do business based on this particular charging structure. So from today on, here's you make a choice now.
But grandfather the old prices.
You cannot start changing. I have a serious problem. We have an issue in the Irish market on exactly this. And I just don't think it's right. I do not think it's right.
Well, now you know what it's called, Carl, and shittification.
I think it's sharp practice, and I don't think it's fair. I don't think it's correct, especially for, you nailed it there, your early adopters, the people who did business with you first day, right, who supported you first day.
Who built the business.
We're going to pick and choose now because we've built our business now. We're absolutely flying it, and we're going to change it. So I have a problem with this. I think it's not right, and there has to be at some stage where there are values that you will say, we're going to stick to these values. We're going to do the right thing here. It's not all about shareholder value. Easier for us as small businesses to say that, but I have a big problem with this.
I know you do, Carl, because we all know what you're talking about, and the example that you've experienced this week I think is egregious. I think you have to accept that firms will encounter costs they weren't expecting when they set a business up, and sometimes things do change.
Agreed.
And if the £4,287 pot on Vanguard, who's walking, can find it somewhere cheaper, then they walk. Otherwise, what you're saying is Vanguard is still the cheapest, right? By implication, if you're staying put,
No, or
having
the
ranted.
most convenient.
So
Stay with them and pay the 48 quid. But what they're saying is the 48 quid is a percentage, works out to be 9%. If you get 9%, you don't get any return. You know, they know the value of everything, the price of nothing.
There's a middle ground. There's a middle ground here whereby you say, "Hey, we've done it. We've done an analysis here. We really appreciate your business. Here's what's going to happen in 2026." Yeah. And so we're just giving you a significant period of time to
a long headwind
to sort this out. And just that's for the existing business.
Sure.
And for the business going forward, it's on the new model. So you make the choice. I don't mind if you want to do your business with us. It's going to be £4 a month or whatever it's going to be. But you guys know what I'm talking about in terms of now. But I mean, there has been examples over the last year or 18 months whereby we're just increasing the prices, and that's going to apply to everybody. That's not okay.
Do you know what? I mean, I think financial services companies seem to be much more in the spotlight, and I just notice these things. Various apps and things. Nick, you and I spoke about this. Was it last year with Evernote, for example? I noticed my Sky TV subscription, and you get this email comes through, and you don't and normally just press delete, but it's because it's page after page. We're changing the terms of our blah blah blah. Scroll down, and they've just done like a 28% increase in the monthly fee, and you think, hang on a minute. But it's not. There's no big. They say, it's the usual. We've fully disclosed, and as I say, Dropbox, this thing is doubled in price for the same thing. Evernote certainly has, and a bunch of all these things have hugely increased. That, in some ways, those things are harder to move away from. You've got all this stuff you've got in Dropbox. Jesus, that'd be an absolute nightmare to try to relocate that somewhere else. You think it's only a couple of £100, but it is 100% increase. There's a lot of that goes on. Ultimately, in a free market economy, you've got the right to walk at any point, but it depends. I guess none of these other organizations set the stall out as being super low cost, super cheap, whereas Vanguard have made a big issue on it.
Vanguard is just renowned for watching the pennies, aren't they? That's probably why this story resonates a bit more because of who's doing it. If it was AJ Bell or something.
I'm pretty sure they did focus on the fees being an integral part, and they had big marketing budget, TV, radio, everything. So they've thrown everything at this, and now they're pulling back on it again. It's what they did with the financial advice offering. So
we've talked about this before. And by the way, on that, I don't know if you saw that. Also, sort of slightly flew under the radar. Talking of Vanguard last week, Vanguard have they're relaunching what they call their wealth management division department out of the US.
Okay.
Article in the FT, I can share it. But get this is a big business. Vanguard is carving out its 900 billion wealth and advice business into a separate unit to speed investment, rising demand, etc., etc. That's a $1 trillion wealth management business, which must make it one of the biggest in the world.
Are they keeping it under the sort of Vanguard cooperative, or are they setting up as a more?
They're carving out. They've hired some lady. Let me see. They've hired some lady from McKinsey, former McKinsey consultant who led wealth management at Toronto-based BMO, headed up Fidelity's personal investment. Like, they are going to town on this, like a global wealth management business for their high net worth segment of clients. Obviously, we talked about this before. They had to go in the UK at a sort of financial planning thing, which for whatever reason didn't get off the ground. So
I think in Germany as well, they tried it there and it didn't work. It's not.
So they're trying again, it seems like. So
financial advice is a luxury product.
Having said all that, we do love Vanguard, and we think they're good friends of the show.
Yeah, we do. Great organisation.
What are you two chortling over?
Just checking with the private group. You sent a message.
Christ,
right, move on quickly.
All right. 39 minutes in, so let's go on episode 60. Let's go on to the meat and potatoes of today's show. So, yes, we're going to do a cliche now. All the fund managers and all the DFMs do their predictions. It's a cliche at this time of year. We're going to do a cliche. We're going to talk about our successes and wins of the last year, our top three, each of us, succinctly and in a round robin style fashion. And I'm going to start. I'm reading from the sheet here, so I'll go with you, Mr. Smith. Your first win of 2024.
So I thought you said you were going to start.
No, you are going to start, Mr. Smith. My name is Mr. Lincoln. You are Mr. Smith.
Okay. So one at a time. Okay. I'm going with the straightforward and obvious one, which was reflect back on the year. in my business, capital. And we had, in simple terms, we had an outstanding year. We had our record year in terms of new clients, assets, revenue, profitability, which is always good news. You hope to be and expect to be doing those things, particularly in a rising market.
Matt Nicholas.
But I think not only that, there's a sense of we're slowly but surely kind of after 20 years getting our act together, in that we've kind of, I don't know, we seem to be much more structured. We're organized. We moved offices. I reported it during the week, and we're in a great new environment as a platform for growth. And we've hired not one but two new financial planners to the team, for a team that only had 4. If we increase our planning headcount by 50%, that sort of augurs well for the future. So, long story short, we had a solid, good year at the main, the main business. That's
excellent. Okay, lovely. That's your first win of 2024. Ultra. What's your first one?
Okay, I'm going to start off briefly mentioning humans under management. I had 2 conferences this year, and in Cape Town, South Africa in September, we had our highest ever score for a conference at 9.04 out of 10, and London then followed in November at 8.88. But the real success for humans under management this year was us building out humans under management premium. We added an additional net new subscribers of about 150, so we're up to 360 members from 15 different countries. So thank you everybody who is a member of that. Thank you very much, Nicholas. So next year it's sort of it's going to stop.
It goes on for 36 seconds. I'm actually stopping dead.
Right. So next year it's much of the same, really. Conference in Cape Town, conference in London, and trying to build out humans under management premium members to 500. That's the next North Star. Over to you, Carl.
Yes, indeed.
Yes. As usual, I didn't read the document correctly, so I kind of took it as what were the kind of lessons from the year. So I would say,
that's fine.
Both personally and business-wise, there were a number of milestones that I crossed. Is that am I mixing my metaphors here? But it was a very significant year for me, and I would say the one thing that I have struggled with in the past, and I think I nailed it this year much better than I have done beforehand, but it's still work in progress, is for me, consistency was the intensity. Okay. So, my great friend Joe O'Connor has given me this phrase, and he just keeps on pinging it to me. Right. And it's, I would have had an awful habit of, doing something really intensely for a short period of time and then actually not making it part of a business strategy change or a personal lifestyle change. So for me, the consistency was the intensity, and hitting milestones is lovely, but not to actually make them the be all and end all. It's like, okay, that's going to just help me drive on and just be better, as opposed to having this kind of North Star moment over there. It's like, it's just life. Life's this big, long, brilliant, hard, messy journey, and to understand that much, much better, and to have this consistency is the intensity. That's my phrase of the year anyway.
That's lovely. That's excellent. Thank you, Carl. For me, my first win, my first thing that I'm going to look back on 2024 and think, yeah, that was really good, was just the evolution of TRAP. Culminating really in TRAP Live at Lola's, a now defunct podcast venue. Coincidence? Who knows? I really loved it. I just had such a great time. It was a great event. My wife was there. My boy was there. It was lovely. And just through the year, the respect and support and feedback we've had from the Trappists has just been absolutely amazing. I think us 4 dunderheads can have such an influence. And it's not boastful to say we are having influence, because we bloody well are, which is great. But people are so kind and so generous in their time. We're generous in our time, but I think we've really got something good going here, and it's a 2-way conversation. We've got these mad, ultra fans, just really love it. So that's my top one for the. Okay, doing the round robin, we're going to go back to storyteller.
Yeah, what Carl just said.
Oh, by the way, I just want to sorry, Alan. I've just read the chat. Vanguard are great friends of Trap and work at Trap Live, and we love you, Vanguard. Sorry, back to you, Smithy.
Yeah, that's right. But we expect, we hold everyone accountable. We share the love, share the good, share the bad. Vanguard are our next outstanding business. Relating back to what Carl just said, I think we ought to, rather than just say, pat ourselves on the back, didn't we do good? There is an opportunity to say what was the lesson, what was the takeaway.
Well, Alan, it's well, not good, but fine, carry on.
And just going back to that, so we did have a good year in business, the one I mentioned a moment ago, and I think one of the things that we did was this magic word, simplify. We've simplified the business. We were kind of all over the place. As everyone knows, I've got an eye for shiny new objects. The amount of technology we had in the company, just layer upon layer of all sorts of stuff, and what we did was just kind of really streamline things and just almost kind of that back to basics. If we're starting a business, we did that in the beginning of the year, January this year. So simplify, I think, is one thing to take away from that. That really helped us get super clear on what our goals and objectives were, and removing things can often be far, far better than adding more things in terms of systems, processes, and technology. So that's just sort of just to cap off my previous one. The second one, of success, and Nick, yeah, absolutely, Trap has been an outstanding success. I don't think I've mentioned it before on this podcast, but I've got another podcast as well that goes under the title Bulletproof Entrepreneur, and it's designed for business owners, anyone, not necessarily financial services, anyone across the board. And during it, I interview and I talk with predominantly successful business owners or people who've advised business owners. And they all tell a story. They tell various stories. And what I'm proud of this year is between Trap and the Bulletproof Entrepreneur, I put out, I think must have done about 50 podcasts, because they go out every week. This Bulletproof alternates with Trap. It goes out every other Thursday as Trap does. So in 52 weeks, and we haven't missed one of Trap and haven't missed one of Bulletproof. That's 50 odd episodes going out every week. And
consistency again. Consistency.
And that's the point of that. I mean, same as Trap. Some of my episodes haven't been amazing, and they've all been at least decent, but some have been fabulous. And I've often said for that particular podcast, I am a small business owner myself. If I was the only person listening, I'll still get something from it. I get an hour or an hour and a half of speaking to someone who's a successful business owner who's always got a story to tell, and I've really enjoyed it. We do have, fortunately, more than one person as an audience. It's not quite as big as Trap, but it does have a niche and growing audience, and I've really enjoyed doing it. So pushing out 50 episodes. I mean, I'm no spring chicken, and that is, again, we advise other people and younger advisors and what have you. Show up every day, week after week. It doesn't have to be the best work ever in the history of the world, but it's just some work. Push it out week after week, month after month. You will make progress. It is inevitable. It's impossible not to make progress. So I was proud of 2024 in terms of podcast creation.
Have you got some big heavy hitter guests planned for 25, Alan?
I do. I've got a number of people. I mean, I don't want to sort of dominate this podcast, of course, pushing my own material.
By all means, you can.
But I've always done them in a Zoom call, what do you call this thing? Riverside that we use.
You got a studio, haven't you?
I'm moving into a studio so I can have in person, face to face. So with that, it's interesting actually. I was never bothered about having YouTube style podcast, but it seems the YouTube algorithm really does help.
Oh, don't poke the bear, for Christ's sake.
So, and in order to do that, you really need to have a bit of a studio or something. So with that in mind, there's a few people can't keep, but I can move on. I won't say any names, but some quite high profile people.
You can hire a warehouse in North Watford.
Warehouse, Nick's spare room, but his cat's using it, I think, at the moment.
Yeah, the cat's throwing up in the spare room. When she's allowed back in. It's getting dark outside. What time do the foxes come out? I could be in real trouble here.
In North Watford anytime.
Okay, North Watford anytime. Okay, thank you, Smithy. Ultra, your second win of the year.
I'd also echo Trap Live was something none of us have tried before. I don't think it's really been done in our profession, this thing of ours. Live podcasts are becoming bigger and bigger. So, looking forward to 2025. My next win, it was Maven Advisor, really, the client families that we look after. And it's a win that, they were handsomely rewarded from an investment point of view. Obviously, it's not all about returns. We know that planning is more important than all the other stuff that we do. But every we'll take it when the years come along that handsomely reward our clients for being patient and disciplined. And then we usually have then a sort of a different floor going forward. So yeah, I've got no problem with creating wealth for our clients because wealth is freedom, freedom is opportunity. So yeah, 2024 was a great year. The average of the money I look after is an 85% global equities, and that's obviously done stomping returns this year. So that's another win for me. Over to you, Carl.
So this one is a bit fluffy too. Sorry about that. So we've got 25 people. Oops.
Kumbaya, my lord. Kumbaya. Kumbaya, my lord. Kumbaya.
George.
Kumbaya, my lord. Kumbaya.
Yeah, it's probably perfect fitting with my mindset right now. I'm very, very, very excited for life in general at the moment, boys. So I would say we've added a lot of people to our team at Metis. And you know the way they say, about talking about culture and you got to create this culture. I actually believe we've got it all wrong. I think actually what you do, if you get really great people who are ambitious and want to fulfill their own potential, that's actually how you create a great culture. You just got to, as the leader or the manager or whatever, you got to just facilitate it and allow people to just do great things and just talk to them and ask them. And I'm inspired by the people around me, and I really am. And I know, look, this is real fluffy stuff. I'm sure I know because they tell me that I drive them mad sometimes. Do some of them drive me mad sometimes? Yes, they do. But together, we're all going in the same direction, and it's just all about people. Everything is just all about people. Even Andy and Nick as the solos, right? It's all about the people that you've got around you and your support structures as well, and you can bring this into the personal space as well. The people who I spend the vast majority of my time with, I like being around them.
Yeah.
And they inspire me. And do I drive them mad sometimes? Yes. Do they drive me mad sometimes? Yes.
Yes.
But you know what? It's about, having your circle who, having people who match or align with the values that your dreams, goals, aspirations, where you want to go in this crazy thing called life. So for me, I've never been as sure as I am right now that Metis Ireland is successful because of the people in the business. And it is not about one or two or three people. It is about every single person. And I keep telling them that, and I don't think they sometimes believe it, but I really, really, really do believe it. Great people make great cultures. It's not the other way around.
Great stuff. Lovely stuff. Okay, my second one, very quick one. Yes, a rising market raises all boats. And if advisors that charge on the per diem basis, the percentage basis, you should have had a very good year. And I've had a very good year. My best year in terms of turnover. It's a lifestyle business, but it's still been my best year in terms of turnover. I've had quite a good run the last few months of picking up 5 family units who I'm helping to save from the financial darkness, perhaps. One today, I was talking with Carl before we hit the record button, a lady today saying, yes, she wants to come on board. This is a lady who for years has been advised in quotes by a firm in up the road in Berkhamsted, a sort of market town up the A41. And she said to me at our initial meeting, I sit down with my advisor and he just talks about these funds and gives me fact sheets, and I don't have a bloody clue where I am. I don't know if I got enough, haven't got enough. I don't understand half of what he talks about. And they've never done any financial planning. And the more people we can take away from those kind of, I don't know what I'm going to be careful what I say. I just think they're wrong. These people are wrong. They're charging. They're not delivering a service. This lady is 45. She knows her time. She's a good earner. It's running out. And she just wants someone to just give her like a plan, just an outline plan. And the more people we can help in that way, the better. That's what my business does, is what you guys do. And it's great that we can help these people. It's still such a shame that there's a large swathe of our profession that aren't really professionals. They're just asset gatherers and charging their money and the rent seekers. Okay, right. Arctic trip for you, Smithy. What, did you go back to your hometown?
Roy Keane has just joined us.
By the way, thanks for ripping the piss out of me. But what you said, Nick, it can't be said often and too many times, because that's the thing. On the surface, financial advisors all look the same, but we're so different. Scrape sort of a little surface level, and you find that a huge number do exactly that. Get a pie chart out, get a graph out. That's what the annual review looks like. You're up 8%, you're down 4%.
Yeah.
This fund, we're going to move from fund A to fund B because I met the fund manager. I went to a webinar. Blah blah blah. Net. Worse off the client is just because they're just not doing it. So what we do is great work. And anyone listening to this, if you're not doing it, you should do. And if you are doing it, keep on doing it, because real financial planning, which is what this podcast is named after, is what it's all about. Thank you, Nick. Yes, I visited the most northerly McDonald's in the world and the most northerly Burger King in the world in one trip. This is the year end, the last episode of the year. Nick, cue it up. I've got a very brief story to tell. Okay. Come on.
Grab yourself a drink, a very long drink. It's story time with Alan Smith.
This time last year, I was thinking about going on a trip, on an adventure. I went out on our Christmas office do, which was, we did the same again a couple of days ago, but 2023 Capital Christmas do. And I was telling my friend and colleague Charles about this. And he said, I'm up for that. Let's do it. And I kind of poo-pooed it and I said, I'm not sure if I really want to do it. Anyway, Charles, over the Christmas break, he just WhatsApped me pretty much every day. He said, come on. Let's do it. Sometimes you need a push. Sometimes you need a nudge to do something. Anyway, and classic sales tactics, the price was going to go up by December 31st. So I thought it's either now or never. Otherwise, the price goes up. So I bit the bullet and I signed up for it, even though I'd done no training or anything else. So I signed up to do what's called the Arctic Circle Rat Race, which is 85 kilometers across the snow in northern Norway and Finland and Sweden. You go across 3 countries, deep snow, freezing your knackers off, living in a tent, which during the night gets to minus 25. But pleased to report, I did it. I achieved it. It was hard as hell. I didn't win. I wasn't the first across the finishing line, but I certainly finished, and I certainly wasn't last. And I completed it. And so, what are the lessons? What are the lessons from that? Well, one is, don't sign up. Don't tell your mates about certain things because they force you into doing things. But I think overall, here's the thing that I reflect on. The kind of classic Maslow's hierarchy. All of us have got, we've been at the game a while. You've got a reasonable expectation. You've got a roof over your head. You can pay your food. You can go on a holiday and all that sort of thing. And I think getting comfortable is risky. And it's dangerous. And I think whether it's in personal life, business, health, fitness, any number of things, I think all of us should, I think I should anyway, force myself to do things classically using an age-old cliche, but outside the comfort zone. Because doing that trip, when I signed up for it, was definitely outside my comfort zone. I thought at a fair push I could do it, but I thought it wasn't going to be easy. And what it did do was it compelled me just to improve my fitness in the first part of the year. So I was doing things which I've never done before, which is like running, sprinting, hill sprints, all that stuff, because I knew I couldn't just pitch up there on the day and expect just to go through this trip. So the moral of the story here is all of us, just think of something that's hard but not impossible, that is going to push you, and set yourself a target. I mean, ideally, share it. Push it out publicly, say, I'm going to aim to do this. I know we've all done various things and varying types in the past. Certainly a couple of years ago, Nick, I went on you in a famous Mallorca marathon, which was a night trip, wasn't it?
We had lots of training for that. We were broken
lots of training, but we walked for about 26 miles through the night, which was a special
preparation, thing. 14 pints.
Yeah. That was a slightly different endurance test. But that's the point of the story.
And see that big building there? Yeah. When we get there, we're halfway.
10 miles beyond it.
See that building? What, that one all the way there? Yeah. When we get to
just
that
on the horizon, when we get to that, we're almost halfway. Yeah, that was a long old trip. But back to the Arctic, it was good. Now, the thing about that particular trip is you can't even move fast if you try. It's deep snow, sometimes up to certainly your knees and sometimes up to your waist. So you just grind. And it really was a matter of grinding it out. And Jesus Christ, you are walking so slowly. And then you look at your map, you look at your watch, and you think, I've been walking for 3 hours. I've gone like 2 miles or something, not even.
Yeah.
And it's, you think, and when will this ever end? But it was, the long story short, the moral of the story is keep putting one foot in front of the other. Keep putting one foot in front of the other. That's all you need to do. So that was definitely a highlight for me of 2024. Thank you.
Excellent. Now, Andrew, I'm not sure if you've got one left, have you?
Yeah, no, I've got one left. The highlight for me by an absolute mile was Carl's 50th birthday in Norway. What a weekend.
Oh, the Norway trip.
What a weekend. Yeah, wow.
Yeah, big surprise for you boys coming over. As far as he knew he could rely on me. That's just a general thing in life. Carl can rely on me. But he's surprised that you guys showed up.
I'm sure Carl might mention it. It's been a big year for him, obviously birthday-wise. A few other things happening. I'll leave it to him. No, joking aside, the biggest thing for me is my little babies, Poppy and Milo, starting school. So they're 4 and a bit. They started school 8-9 weeks ago. Very cute. They are twins. They split them up, 2 different classes. So that's also quite interesting. So I've got 2 sets of WhatsApp groups, 2 sets of parents' evening, 2 sets of everything. But anyway, very interesting. And they had the nativity last week. They're settling in, amazing. They're great little humans. I couldn't be prouder. So that's my big personal win of the year. Over to you, Carl.
You're muted, fella.
Oh, he was doing so well.
He's still muted.
Carl, can't hear us.
Carl, come on. How can I fly like the eagles?
How can I soar like an eagle?
Yeah. Flying with pigeons.
Cherish the twins at that age, Andrew. I've got triplets, as you know, and they're about to finish school this year, and they'll be flying the nest. And it'll be only myself and Emma left. But anyway, look, I had a big birthday this year and a big party and celebrated, I think, appropriately. It was all great. So, for me, I think a big win this year was we had kind of good momentum in terms of business coming into 2024. And we built on that momentum and we kept the momentum going, albeit there were kind of speed bumps along the way. And maybe beforehand, sometimes speed bumps might have thrown us off course or thrown me off course. I think we were really, really good at keeping the main thing, keeping the focus and just keep it really, I think, Alan, you mentioned, keeping it really, really simple and saying, okay, this isn't hard, but if we actually just keep going, and accept that they're going to be these speed bumps along the way. They're not roadblocks, except they're speed bumps. They're inevitable in business and in life. And you just keep going, keep pushing through it. And for me, and I was chatting to some of my guys earlier on today, and I was going, that's our thing, guys. We just make sure that, we start the new year as we finished 2024. We just keep going. We're building great momentum and we're having success, but we're having fun too, and I think that's really, really important. So for
Carl,
me, that's the holy grail. Yeah.
Can I ask you something? If it's not too personal, which was you openly talked about on this show maybe a year ago that the previous year to that you'd had some challenges. You burnout, I think was the phrase.
Yeah.
You used, and you had to take some time out and really kind of recharge your own batteries. Listening to you and just through our day-to-day conversations that we have, sounds to me that you haven't experienced that this year, or not to the same degree, shall we say. Is there any sort of tools or tactics that you have embraced that have
I can tell you,
you?
it's one single thing, right? It's to create space for myself, to just have space for myself. So it's so you guys have seen this. I was talking to Nick earlier on. I said, Nick, you've sent me 2 emails and I haven't replied. I know they're there, but I haven't replied. There's lots of people suffering the same fate with regard to the emails they send me. I'm not replying to everything. I don't need to reply to every text message. I say no to loads and loads of things. I was due to go out last weekend and went, you know what? I'm not up for it. I'm not going to go out. I'm just going to look after myself. And there are people going, here, that's not okay or whatever, Now, look, if I've committed to something and it's important, I will be there. It's not that I'm not turning up to loads and loads of different things, but I'm creating lots of space for myself and you have a habit of filling the space, and I'm trying my damnedest not to fill the space. And I can't tell you how much that phrase consistency is the intensity. I had an awful, it's in my personality to, really go and do something and to say that's actually not, life is much longer, and it's a journey, and you got to, instead of that target and then I'll get it and then I'll move on to the next thing. It's like, I'm going into the new year now. I'm going into Christmas going, can't wait for Christmas. I can't wait for the new year. I'm planning lots of stuff for myself for in the new year. So I'd say, to summarize, very long-winded answer to your question, Alan, say no to loads and loads and loads of things. And you guys know I'm actually doing it.
It's a super.
Andy,
well done. It's great.
Well done, mate. For a moment then I thought you were going to ask him where he got his jumper from, but thank God you didn't.
No. It's quite obvious where he got it from.
Very good. Saying no is a superpower, without shadow of doubt. Okay, I think I'm the last one to go, and then we'll wrap up the meat and potatoes section. My joy, the thing that's brought me happiness this year is, and I won't make this overly political, but I think over the last 10, 15 years, there's been a real pressure on what people say. There's freedom of language, freedom of expression has taken a real battering, and there seems to be a real pushback against it around the world. People like Javier Milei in Argentina is doing amazing things, rolling back the state. If you could just discount Trump and ignore him, the team he's putting around him, because I know some people have Trump derangement syndrome, the team he's put around him is going to be so interesting. Musk, Vivek Ramaswamy, J.D. Vance, Tulsi Gabbard, Robert Kennedy. These are all Democrats who say to a man and a woman, I haven't left the Democrats, they left me. It's a really interesting movement we're seeing, because I think people start to wake up. The state is just too big in the Western world. This country, we're unusual. Western Europe is also going the way of Argentina and the US in terms of its politics. We're an outlier here. We voted for a party that believes in a bigger state and a bigger state. But I do think the tide is turning. I think people have had enough of this thought police nonsense, and I think it's going to be good for us all. There'll be some pain involved, and whatever America does, we eventually do. Okay, we're just a colony of America, really, as are many countries in the world, because of its enormous cultural influence and economic size. It just drives so much. That's. I think I feel really positive for the future. And I'm going to quickly wrap up mine. I want to say thank you to my son, Luke, and my wife, the lovely Penelope, TLP. I'm just blessed to have these two people into my life. I'm very lucky. They mean the world to me, and they are my rocks. And that is me, really, with my wins, and I think all of our wins for 2024.
Can we play Kumbaya to finish that one off, Nick?
I've already done it. And I only have to play it once on the side, as you know, Andrew. You can't play a drop twice. What's the one you like? Let's do this one. You like this one? There we go.
When you played that first for Alan, that is the funniest YouTube short out there. Check it out.
We are 1 hour, 7 minutes into this, which can only mean that we're getting very close to the end of this show, the very end of the last show. Actually, not going to be the last show. We'll talk about that, guys, as well, before we stop the recording. But we need to move on, because I can see Posties dragging the bulging sack up my drive. She's about to ring the front doorbell. There she goes. It's amazing. It's almost spontaneous. This is the bulging sack of Trappist questions sent in by you, our beloved Trappists, and we get through them. If you want to send us a question, there's a link in the pinned tweet on X, or the pinned X on Twitter, or whatever. And also in the so-called show notes. We are getting through the questions. We're now up to June of this year. And we've got 2 questions today, guys. We'll see if we can do both of them, depending on time and so forth. This one is an anonymous. It's from someone called AN Advisor. That can't be his real name. One of these multiple questions where I run out of breath halfway through. Hello, Trap hosts. I've recently discovered your podcast, and I'm finding the content extremely helpful in my journey as a financial advisor. I am a newly qualified advisor, and I'm currently under one of the larger AR networks, a firm of around 12, most of whom are mortgage advisors. I have been planning ahead, and I would very much like to leave the AR sphere in the next 18 to 24 months, once my current firm is in a position to cope well enough without me. Do you have any advice on planning this move in terms of discussing it with my current firm and my clients to make the transition as smooth as possible? Apologies for the anonymity. It's always a tongue twister. I don't wish to show my hand to my current firm just yet. Right, I'm out of breath, so I can't answer that. One of you three can.
I'll go quickly, and then I'm sure the guys that run larger firms will have an opinion on it. I tread very carefully. I don't quite know the detail, but I certainly wouldn't be mentioning it to your current firm unless things were very much firmed up. The relationship would change immediately once you tell your boss that you're thinking about setting up on your own and moving elsewhere. The client situation, again, is quite an interesting one. Again, I don't know who owns the client. Yeah. Nobody owns clients. Is it the firm? Is it the person? What's the contract set up? So again, you're going to be on slightly unusual grounds there. So just tread very carefully is what I would say. I've left a couple of firms over the years, and then my third firm I worked for was my own. The path then was a little bit different to what it is now. So if you're thinking about setting up directly authorized, again, it's not that easy. I think about 11% of firms get the sign off, and it's a painful journey. Just tread very carefully with what your next move may be. Over to the lads that run larger firms.
Carl? Look, I'll go. What I would say is there's not enough information there, and I fully understand why it needs to be anonymous. There's not enough. He says,
It's not enough info.
I'm going to leave just when my firm can manage me leaving or something. What are they all dependent on his income or something? The entire company. What's that all about?
Cope well enough without me.
Cope well enough. What does that mean? Well, it's a firm with loads of advisers. So why would it not cope well without you?
Did he say they're mortgage advisors?
Yeah, mainly mortgage advisors. Yeah. So I don't really get that. And why? I mean, an AR. That's what the firm is an AR. The firm's an AR of another bigger firm, or
don't worry about the detail. Just focus on
because it does
leaving and setting up. It does. When you tell your bosses.
No, but it matters. So here's my take, which might be different to yours. Yes, if you've got your path carved out and you know what you're doing and where you're going, and you've really explored it because you make a point, you're going to set up directly authorized, is difficult. The network option, which is also an AR, by the way, that's another name for it, becomes the more popular option. But here's the thing. I think you should be candid, open, straightforward, and speak to your boss, speak to the people who run the company and tell them the truth, explain your reasons why you're planning to go, work it all out, have a grown-up conversation about the client relationships. It does not need to be adversarial. I've had people who've chosen to move on from my company.
Going into that conversation, you have to assume it could be curtains. If it's not, great.
You've got to assume all
you've got to assume
options.
It's curtains.
Well, one of which is you're told to clear your desk
Exactly.
Immediately.
Assume it might be game over.
Yeah.
So assume that might be, but hope that it won't be. Now, only he or she can judge in terms of, because they will know the relationships, they'll know the company, know the senior people involved in the organization. And I have heard some negative stories that you're told just to piss off, and the dynamic changes immediately.
Yes, exactly.
But you should go in with the best of intentions. So when I part a company with people, the ones that have done it with honesty and integrity, clarity, I'm still good friends with now, and I fully understand the reason. And I've actually supported them. I've helped them find other opportunities later on. Those that choose to be a bit more devious and go behind the scenes. It's just, I always think it's a small village. Our sector, our profession, our industry, people know each other.
You are quite unique as a boss firm owner, though. Adam.
In many ways,
the stories you tell me are different to what I hear in the scarier, wider world.
What do you mean?
But,
I mean,
I
people.
I think you are a good person to speak to about that, and you will manage them out in the best way possible. A lot of other firms I hear about, it's completely another. It's a dog's dinner.
I do. I hear it the other way of people who are joining us.
You're unusual, is what I'm saying.
Because I'm fair and open. No one should have the divine right to have somebody work with them for the rest of their career.
I got it.
But if you're open, tell your boss and allow the boss time to prepare. Just say, look, give us a couple of months because we might need to get a replacement. And what's the situation about client relationships? So you'd have. Maybe I am unusual, but I hope more people would have a kind of dignified, grown-up approach. Now, as I said at the beginning, only this anonymous advisor knows the facts. If he thinks that the culture is negative and they'll just close him down and kick him out the minute he says that, then he's got to prepare himself. He's got to get all his ducks
that might happen
in a row. If you're assuming that, then do exactly. But I would start off with taking the positive, more open, friendly, communicative, candid approach. Okay. Carl, any last words?
No, I agree.
Okay, I think in that question, that long question, the key word for me is discussing it with my current firm and my clients. It's the my clients bit. It's who owns the. I mean, that sounds terrible, but you know what I mean.
Yeah,
who owns the clients? Typically, the clients belong to the firm. Okay, so
it depends on the contract.
Depends on the contract.
And the contract is likely to say they are clients of the firm.
Guys, I go back to what Alan said, right? Never mind the contract, right? Just be open and honest, right?
Yeah.
That people who have we have definite net inflows in terms of employees to our team, right? But of course, there have been times when people have left, and the people I still get on with are the people who I have had open and honest discussions with. And I was way back, the guy who went in and said, oh, I'm going to leave. And I was treated terribly.
Way back.
Yeah, but it was way back. And it was piss poor. And I don't ever want anyone to feel like that.
Sure.
Having said that, are there a couple of cases where, there have been kind of semi-fallings out? Yeah, there have. But I would say it was due to lack of honesty.
Yeah.
So there you go.
Business.
Okay.
The truth will set you free.
The truth will set you free.
Correct.
Exactly.
And there's enough business out there for us all.
We are 75 minutes in. So do we want to do another question, or should we hold it over till the next?
Yeah, do one more.
Yeah,
we normally run 90 minutes.
Okay,
Christmas.
Dean Brooks, who's given us his LinkedIn profile as well, so that will be in the so-called show notes. Great show, guys.
Can you read out his LinkedIn handle, Nick?
Yes, http://linkedin.com/IN/DEAN-BROOKS _493-730-116. Do you want that again? Or
No, we've run out of time to do that question.
Really
Okay, good question, Dean. Thank you. And thank you for posting that in. Right, let's move on to the next. Dean, right, your question. Great show, guys. I'm 3 and a bit years into this industry. Profession, Dean, profession. And after a number of years in the motor trade. Oh, you made a real switch. Okay. I've started listening from episode 1 a couple of weeks ago and just listened to episode 14. You talk about the 4% rule for safe withdrawal rate. And Andy, you mentioned multiplying the desired monthly income by 300 as a rule of thumb. Just keen to dig a little further into things like assumed growth rates. Are you preserving capital during withdrawal, or is it a plan for the client to run out of money at age 100? Interested to hear a little more on this and look forward to getting the answer to my question in a few weeks' time when I'm all caught up. That was, that's 46 episodes ago. Keep up the great work and thanks in advance, Andrew.
Okay. Abraham Okinsanya, good friend of the show, good friend of us, has written a book about this called Beyond the 4%.
Good friend of ours.
Good friend of ours, sorry. He's written a book called Beyond the 4% Rule, but just to give you a very high level over this is just you back calculate the 4% rule. So if you sit down with a client and they say, I want to spend £1,000 a month for the rest of my life and never run out of money, back of a fag packet, you times the amount that they want to spend per month by 300. It's back calculating the 4% rule. So £1,000 a month times 300 is 300,000. That's their number. If you were to be a little bit more cautious and you wanted to withdraw only 3.5% from your portfolio, you times it by £350 a month. It's very broad brush. If you just sit down with someone and they say, I want to spend £5,000 a month for the rest of my life, you times it by 300 is 1.5 million. If they've got 3 million quid already invested, you say, you're sort of going to be okay. Obviously, we still need to crunch the numbers. If you sit down with someone in that situation that wants to spend £5,000 a month for the rest of their life, they need 1.5 million and they've got 300 grand saved, there's a big gap. So it's very broad brush. The 4% rule can be argued all day. It is a rule of thumb. It's a starting point. That's it. So just times it by 300 to get their number, work out what their gap is or not. It's a general financial planning concept. Over to you, Nicholas.
Yes, the second part of the question was very good as well. Interesting. Are you keen on preserving capital during the withdrawal, or is it a plan for the client to run out of money at age 100? Well, it all really depends on the client's circumstances. I mean, the base thing is, okay, we want to make sure you've got enough, whatever that means, based on a whole range of assumptions. And if that means you having £1 left in your pension pot at age 100, well, that's still done the job. But most clients want to leave a legacy of significance as well to those they leave behind. So it's always a case by case basis. But the baseline, the bottom baseline is: do we think you're doing the things now so that your later self will reasonably have enough to live a 3 to 4 decade retirement where the cost of your living is going to quadruple at trendline UK Irish inflation? If we're building these pots up and it's clear you're going to have loads more, then we can start talking about legacy and giving away and so forth. But the base plan is, let's get you there first of all, and then we can look at what you want to leave behind. Any further thoughts?
2 quick things. That's another thing repeated time and time again. It's an art more than a science, actually, at least as well as, and therefore it is, as Nick just said, is determined by the client. Now, to assume that people will spend the same amount of money in real terms or otherwise every year.
Every assumption could be argued. We know that.
Every assumption. Now, so that's it. So start with asking incredibly good, detailed questions of your client in terms of what they want, lifestyle, design your ideal life, and then we can put some numbers on it. We're making the guess for how long you live, but is legacy important? Is it not? Is philanthropy? All those other things. So it starts by really knowing the client and not. It sounds the danger in this is making it templated. I'm going to run it such that the client runs out of money age 100, and that is just wrong. And one other thing, and I think maybe we'll come back to this in the new year. Just reminded me of a conversation I had with a colleague the other day. Now, like you guys, we use effectively linear cash flow forecast. You use Voyant. We use Truth. And this particular client's circumstances, it was the classic, you've got way more than enough money you need. You're never going to run out of money. Happy days. Go fill your boots, go on holidays, spend your money, enjoy yourself. And then we cross-referenced it with Timeline cash flow model, which uses Monte Carlo scenario planning, which is all the various multiples of numerous things that could happen in terms of sequence risk and everything else using 120 years of data. All of a sudden, wasn't quite so rosy. There was now a 78% chance of you achieving all and not running out of money. Now, you can get, all that does is it throws up, there's a big difference between just spend your money and never worry about it to, you might just need to pay a bit more attention to this, because if we have any repeat of any some circumstances that have happened in the last 100 years, and I know I get the point, you can be overly analytical because who the hell knows, but just be clear that these long-term linear cash flow models are just a starting point as well. Do not rely on them as the be-all and end-all for spending money, saving more money. It's this stuff is really, really important, and maybe using more than one type of methodology in terms of straightforward linear cash flow, assuming 2% real rate of return. Thank you.
Okay, brilliant. Just really quickly, for those listening to this and not watching, Andrew held up his Bible, which he cleaves to and is part of his life hack. It's called Die With Zero Friends, and it's a Bible that he's been cleaving to very, very strongly.
Once I've read the book, I'll provide a full and detailed review on a future Trap episode. Have any boys read this book, by the way?
No.
Okay.
Right.
I'm living with zero.
Oh, bless you. Okay, let's move on then. We might as well do Culture Corner. We're getting towards the end. 1 minute, 81 minutes in. Let's do Culture Corner. Okay, I'll go first. Kind of tease on from what I said about maybe the rolling back of the last 15, 20 years of sort of just oppressive states and a sense of, I don't know, the government getting too big. My book of the year is, Culture Corner for this episode, Trappist. So we're looking at our favourite cultural things that we've consumed in the last year. Mine's The White Pill, A Tale of Good and Evil by Michael Malice. Now, on the basis of this book is a history of communism, which is grim, right? It's not taught at schools, and if you don't know about it, you want to get this book and you want to read it. But he writes it in a very engaging way. He says how communism was set out, what it was supposed to do, how it transformed in Russia, in China, in Cambodia, in Korea, everywhere it's just killed millions and millions and millions of human beings. It's really, really bad. It's a really, really good book, and we should be giving it to our kids to read because they ain't taught about it in school. And I would highly recommend The White Pill. It's more of a cracking read. If you can have a cracking read about the deaths of hundreds of millions of human beings, this is the book. That's my one for 2024.
That's a jolly book for the.
Is this the Christmas present you're going to give to your son?
Those who don't know history are doomed to repeat it, right? We don't know, we have these morons in the West who supported Stalin, these idiots, these useful idiots, and they're back now in our governments, supporting appalling regimes.
Is that I know you read a lot of books or listen to or read them. That is genuinely your best book of the year.
Yeah, just for the chuckles.
Yeah.
Yes, it's a really good book.
Interesting. Yeah. No, it sounds good. It does sound.
I read the Elon Musk one as well, which you're going to do. That was excellent as well. But I just had to pick one, and I thought, sorry. So go on.
Okay.
Yeah, I was given this as a Christmas present this time last year, and I read it at the beginning of the year. And even though it was at the beginning of the year, it remains the best book that I have read, which I think we've all read it actually, or listened to it, which is the Walter Isaacson biography of Elon Musk. So interesting, Elon Musk. I mention him sometimes, and there's a lot of hate towards Elon Musk, which is quite
it's mad. It's insane.
I mean, whatever you think of him as a human being, Jesus Christ, the stuff that he has accomplished and achieved and seems capable of. So I think it's just an incredible. I like biographies anyway. I think you learn a lot from people. And Isaacson is a really good writer. He's written Steve Jobs one. He's written a bunch of others that are high profile. people and characters. I just like his writing. So Elon Musk's story, his personal story growing up in South Africa and all that stuff is was very interesting and stuff. But the business lessons that you learn from it, and he's just like a no nonsense. He's just talk about simplifying things, cutting things to the chase. A story about and how he's built SpaceX and the stuff. And all the things he does are impossible until he does them. And there are lessons just distilling the problem down to its core. Uses first principles thinking. What is the issue? What's the problem we're trying to fix? How can we best achieve that? There's too much just bullshit and layers of management conversations and discussions. Whether you like it or not, him coming into X and getting rid of 80% of the staff and then making it even more successful than it was in the past. That's incredible. The stuff he's achieved through Tesla, etc. Anyway, I think it's just a great book. It's a load of interesting and important lessons, both life lessons and lessons for business as well. My favorite of the year, Elon Musk by Walter Isaacson.
Great stuff. Wodge.
Tuesdays with Maury, which is actually a culture corner from Nick Lincoln. It had a significant impact on me, I would say, and made me really kind of take a step back and think about actually what's important here. I think it's an amazing book. I think it'll be a brilliant read for anybody over the Christmas period as you kind of are relaxing with your family, but ready to kind of launch into another year. I think it'd be really good one. If you haven't read it already, go and read it. I think it's just brilliantly written. It's a beautiful book, really is.
Yeah, I did. I really enjoyed it as well, Carl. It was very good book.
Yeah. An honourable mention for me to The Psychology of Money, which I have only read in the last couple of months, which I know is bananas, right, for someone involved in the financial planning, investment, wealth management, behavioral finance, whatever you want to call it, right? It's a must read, and it's really easy read and really enjoyable as well. So they'd be my two that I would recommend highly. But if you're only going to go at one, Tuesdays with Maury, I think everybody should read it. Brilliant book.
Just on that, Carl, I'm assuming you haven't read his second book, same as ever, Morgan Housel.
No, but I bought it on Audible only the last week or so, Andy. So it's coming up soon.
I think it's better, which is a punchy statement. Yeah, it's really good.
Yeah,
I think
looking forward to it.
Will like the second one more than the first. Okay, it's for me to close up the Culture Corner. Again, the book on Elon Musk by Walter Isaacson is insanely good. That was definitely up there. But my book, if I had to pick one, is Scott Galloway, The Algebra of Wealth. I think it's amazing. I don't think you should read this at the beginning of your wealth journey, let's call it. You have to have made a few mistakes with this book to hit you between the eyes, but it's amazing. So that's my recommendation. My final thing, it's the Elon Musk sort of connection, but it's a podcast that came out very recently. Mark Andreessen, who a lot of you have known on the Modern Wisdom podcast, they talk in length about Elon. So if you like Elon, you're going to learn a lot of insights from a close friend of his. I know it's only wealth, but I think Elon's net worth at the moment is about 450 billion. I know he's doing a lot more, better stuff beyond the wealth, but it's just insane numbers, and the guy's just getting started. I mean, the good he's going to do inside the US government is going to be something we're not seen before. So yeah, a massive love-in for Elon Musk, and there's two recommendations, but Alan, Nick, or Elon Musk fans, listen to that Modern Wisdom, Mark and Drew.
I did listen to it.
Yeah,
I couldn't get all
YouTube. Yeah, I watched it.
I couldn't get all the way through it, but I just listened to most of it.
He's an acquired taste, is Andreessen.
Yeah,
I quite like him, but you see all the comments. No one was loving him from the traditional Chris Williamson.
It was crazy.
Fans.
I went for a run for it this morning.
Interesting. The last couple of all-in podcasts without David Sachs, because he's got things not quite the same.
It's like if one of us was missing. I mean, imagine this podcast without you, Nick.
Depends which one.
That's true.
Oh God, I wonder is it me? Oh God, I don't care.
I'm pleased that two of the authors mentioned in the book of the year are
close personal friends of
mine. Morgan, Morgan's a friend of yours as well, Andrew. I introduced Morgan to you.
Scott,
for our
saw
lunch.
him in a Marylebone restaurant.
Scott, I meet him all the time.
Begged him for a photo.
His latest his own podcast. Prof G podcast. He does a whole big intro about living in Marylebone. He does quite interesting.
Yeah.
About where he lives. He's a neighbour of mine. So yeah, great to have some close personal friends do so well. Well done,
Sorry,
boys.
Alan, what did you say about discussing something for the end? Have you forgotten because man of your age? Or
Yeah, I've forgotten. I really have.
Well,
Maybe I've
actually,
done.
right,
You said-
Trap Pack. We are at 90 minutes
Well, that's
nearly, and this isn't our final episode of the year, is it?
Oh,
That's what we're going to talk
Somebody's
about.
going to put together
Yes,
our greatest hits.
Yes.
YouTube
Yeah.
Shorts. Just do the YouTube Shorts.
Make AI do it. Come on.
No, I'm not doing
You
anything.
mean-
I'm not
yeah.
doing anything. I'm not doing anything.
Are you closing shop for the year now?
Well, I'm not
Nick?
doing
I know-
that. I'm not
I know
putting
Carl
Chelsea
told us
away.
about 2 weeks ago.
This is giving everybody a good insight as to how
I was
our
going to say,
chats go
you're
on.
talking
Oh, why don't you
about
shut the fuck up?
demonetised again, Nick. Demonetised again.
Sorry for that lady who drives in the car with the children. Sorry. Yeah.
It's school holidays now. She must.
So you're saying the show that we're going to put out on the 2nd of January is going to be the best of. Great. Okay. Get someone
Is
to
it?
chop up the best of. That's hopefully going to be the case, yeah.
Why don't we just talk about this once we've
Off
concluded
air.
the recording?
Right.
Okay.
Okay, everybody.
Okay, right. So there you go, dear Trappists. And episode 60 comes to a close.
60, close
and
the
another
year.
pile of traps
Wonderful.
slides down the
Really
U-bend of
good.
Father Time. Thank you, Trappists, for your support in 2024. I think I can speak for the Trap Pack. It's been a great ride. We've got more things planned in 2025. We're going to get even bigger and even better and even more unbearable. Until the next time, get through the festive period, chew down the mother-in-law's Brussels sprouts. They are as bad as you remembered them to be, but just smile, grimace, get through it, cane the booze, and we'll see you on the other side. Adios. Goodbye.
Merry Christmas.
Merry Christmas, everybody.
Bye.
Play the Christmas jingle, Nick.
He hasn't done one. Come on.
Amateur.
Bloody absolute shackles.